Welcome back. Well, let's look at Puravankara. Now, that's a stock that's been rallying almost 8-9% higher in trade after coming out with a very strong set of numbers for the third quarter. The company posted revenue growth of 46%. That's on a year-on-year basis. Margins also expanded and are now almost touching 35% versus 28% earlier. Sales value and volume has seen good growth as well on the year-on-year sort of comparison basis. To discuss the outlook going forward, we have with us Abhishek Kapoor, Group CEO at Puravankara. Abhishek, thank you very much for joining in and taking the call. I'm looking at the numbers and they're looking, of course, very, very strong. Sales value up 56%, volume up 60%. So let's just start with the guidance, because I think your total launch pipeline guidance for FY24 was 15 million square feet. Now, where are you at the end of Q3? And also give us the guidance on sales value and volume, if you can, for the rest of this year. How are you likely to close out FY24?
So I'll first give you an update on where we are on the launch pipeline, and then we can possibly talk about what we are expecting in the last quarter. So far, we have opened about 4 million square foot. Total approval and sanctions in terms of launches, we were expecting to be at about 15 million square foot. So far, we have already opened about 4 million square foot of the 8 million approval that we have received. Now, what we intend to do is in the next quarter, we will add another 4 million square foot. So when we are looking at initially opening about 7 million square foot, we will beat that target in terms of launches. Even though overall, the sanction that we will get in hand for launches will be at about 12 million instead of 15 million, because we're expecting some of the projects to slightly spill over to come towards the end of the fourth quarter and maybe spill over to the first quarter of the next financial year. So those borderline cases, if we remove, we'll be at this kind of a number. Now, in terms of sales numbers, we are already at 89% higher in terms of 9-month number. So we were at 2100 crores last year, same 9-month period. Happy to share that we are at 3967, which is at about 89% higher. And I think with these launches, we will continue to push that trend. And we believe that the last quarter normally is a big quarter for us. We will establish a good number there.
So what, 4,500 sales, more, less?
So we don't give guidance, you know that. But what I'm saying is that, we do have a very robust pipeline of launches. We have a certain internal target which we intend to achieve in the last quarter. And with this kind of volume, if we are opening 4 million square foot of sales in the last quarter, I think the numbers will look good. And, most importantly, and what's exciting us really is the fact that our cash flows have improved significantly. Our operating surplus has gone up by 100% versus last year. And not just that, if you see our cash balance, it's in excess of 800 crores. So this is all getting us ready for big deployment plans in terms of investments in new acquisitions.
Yes, you've also brought down your debt by nearly 251 crores in the quarter. Abhishek, talk to us about your Mumbai plans. You have forayed into the Mumbai redevelopment market with your first project of approximately 6 lakh square feet with a potential gross development value of 1,500 crore rupees. You go on to say you're actively pursuing 12 opportunities and you're shortlisted with advanced discussions ongoing with 4 societies. What's the overall, the addressable market that you're looking to target from Mumbai, given, what could be the value that you will generate from Mumbai? What's the timeline looking like?
So let me just take a step back. I think Mumbai has got a huge redevelopment opportunity. We believe that the Mumbai real estate market will have in excess of potential of about 3 lakh crore of GDV potentially possible from redevelopment projects over next, say, 7 to 10-year time frame. Now, if that's the kind of universal set, then the opportunity is massive. We have taken our first step and, we are excited about it because the first one is always the toughest one. And you're right, we are actively pursuing opportunities. Our goal clearly is, and I mentioned this in the past, that anywhere between 40 to 50% of our business has to come from West. Our realizations in Mumbai will be obviously much higher. And of course, Pune is also going to contribute because we are expanding in Pune as well. So for the West, we believe that if 40 to 50% has to come, then there has to be obviously much larger investment and much larger revenue and pre-sales contribution coming in from the West. And of course, redevelopment is a clear strategy as far as the Mumbai market is concerned, other than doing the other transactions that we are working on in that market. So
what's the current contribution of the West?
Oh, it's much smaller. It's at about 10 to 12%, but it has a huge potential. I think next financial year will be a good year for us in the West.
Abhishek, I just want to come, it's budget season, so I must get your take on the affordable housing segment. First of all, what's the contribution of, Provident to your total sales right now? And how do you see the mix as we get into FY25? And just comment on the incentives. What additionally would you like to see? There's some expectation, or at least there's a hope that maybe the definition of affordable housing should be tweaked. Just tell us from a tax point of view, what additionally would you like to see in this budget?
Look, two things. First question on Provident. About 35% of business has come from Provident of the 3,967 crores so far. Having said that, this number, according to me, can be much higher. It's more about how much inventory we can bring to the market. And it's got more relevance in that context. In fact, the next quarter, we are talking about more Provident projects coming in. So I believe that, Provident will do fantastic numbers in the last quarter for us. Having said that, on affordable housing, see, there are two segments of affordable housing that we look at. One is which is commercially viable, and one which is commercially not viable. Commercially not viable projects will have to bring in completely different policy making from the government. Commercially viable projects today have become a challenge because of 2 or 3 major reasons. One is clearly GST and cost of construction. Now, government needs to find a way to ensure that the definition changes firstly to appropriately adjust to the increasing income levels. So if you look at the definition, typically, if you look at tax exemptions, which is almost at 8 lakh rupees per annum salary, literally you don't pay any taxes with some investments. So government has allowed that. I'm sure they're going to take another step in that direction and increase because of the cost of living. Now, with that, a household income would be anywhere between, say, 16 to 17 lakh rupees, which is typically tax-free. Now, if you look at that number, easily your affordable housing bracket is at about 75 to 80 lakh rupees, because that's the affordability that they will have with a household income. So definition clearly has to change. Now, if you look at this definition and understand the consequences thereof, is exemption on taxes on construction costs. Because today, if you do not let the pass-through happen of the GST, it is practically impossible to do the construction. Now, let me come to the second and third point there. Second point is on cost of interest and cost of capital. Affordable housing cannot afford that kind of cost which today is levied on it. What do we need to do? If you look at affordable housing or housing, typically in housing for all, which is Prime Minister's vision, it is one of the biggest parameters of capital formation in the country, just like infrastructure is. So
just to sum it up, Abhishek, we're actually running into a commercial break right now. So just to sum it up, one, you're saying tweak the definition of affordable housing to, let's say, include houses up to 70 or 75 lakh rupees. Anything else?
Second one is to give infrastructure status to affordable housing and make sure the cost of capital comes down. And third one is help us with the land cost and the premium cost with the approval cost, which the government is asking us to pay up. Because those are all three which contribute hugely to the cost.
All right. Thank you very much, Abhishek, for joining in. We'll chat with you when the budget is round the corner. We will, as we move forward, let's throw the